Discount points are a term that you'll hear during the mortgage process when you are looking at your loan options. Hey, I'm Michelle Dugan, and I want to talk to you today a little bit about discount points. Discount points are a term that you will hear during the mortgage process when you are looking at your loan options. So one discount point on a loan is going to be equal to 1% of your loan amount. You can use these discount points to prepay your interest in advance so that you have a lower monthly payment and a lower interest rate over the term of your loan. Now, it doesn't always make sense to have discount points associated with your loan and getting that lower rate, but for some people it does. One thing that you would definitely want to look at is how long are you planning on staying in the home? How much money do you have to be able to put towards that monthly payment every month? How much money do you have to be able to put towards the closing costs and to prepay discount points if they seem to make sense for you? And so there's a lot of different things that you'll want to look at and consider when trying to consider whether discount points make sense for your loan or if they don't. I want to show you a little bit of an example of how discount points work and how it impacts your monthly payment and your interest rate. If you will take a look at the screen I am sharing now, right here, this is going to show you a couple of different examples based on a $300,000 loan. So if you were to pay no discount points and you just took what the par rate was for today, in this example, if that was 3.5%, your payment would be $1,347 per month based on the $300,000 loan amount, and there's no break-even period because you're not paying any discount points. So your payment is what it is and your interest rate is what it is. If you were to pay a 1% discount up front, that would be equal to $3,000 on a $300,000 loan. So that, in this scenario, paying 1% might buy the interest rate down to 3.25%. It would also lower the monthly payment to $1,305 a month. So you're going to have a monthly savings in this scenario of $42 a month. You would take that $42 a month in savings. You want to divide that into the cost for the discount points. So you would take $42,000 divided into the $3,000, and it's going to give you a break-even period of 72 months or 6 years. So essentially, if you were to stay in the home for longer than 6 years, then you're going to come out ahead by prepaying those discount points. If you're not going to be in the home for at least 6 years, then it may not be in your best interest to pay those discount points up front. The next scenario down is going to show you what it would look like if you were to pay 2% in discount points. Again, it's going to lower your interest rate. It's also going to lower that monthly payment, and it's going to have a break-even period of 73 months. Now, these discount points, when you prepay them in advance, you cannot get that money back. So if you were to happen to sell or refinance in 2 years after you've prepaid these discount points, you don't get any of that money back. Yes, you would have the money that you had saved on your monthly payment, but the rest of that money would just go to the bank at the end of the day. And that's not really who we're looking out here for. We're looking out for you. So you definitely want to look at your whole scenario and how long you think that you're going to be in a home. If you think that you have plans to move in the future or might possibly want to refinance in the future, discount points may or may not be the right option for you. Now, some lenders will put a lot of discount points on there and they'll get your interest rate very, very low, but you want to make sure that you're going to recoup the cost for those interest rates. This is basically where the scenario comes from when some people have an incredibly low interest rate versus what other people are getting. Typically, it's because they've paid a lot of discount points up front. So what makes sense for one borrower may not necessarily make sense for you. Either way, you have to be aware of these discount points. You want to know what you're paying and where your money is going. The calculation on it, like I said, you can use the example that I've shown you here, but you want to take that monthly savings, subtract that from what the monthly payment would be without discount points, divide it into whatever the cost would be for the discount points that you're prepaying up front, and figure out how long it's going to take you to break even. Whether that's going to make sense, there's really nobody that can answer that other than you, but your loan officer should be able to answer any questions and help you walk through that scenario. Or if you have any other questions that we can answer for you about discount points, please feel free to reach out and we'll be glad to help. Thanks so much.